Good evening, everyone. Time for another silver update. Well, we did get the expected break that I was looking for short term once this trend line was breached. I expected a pretty violent move. Now, as you know, I was in the AGQ 190s. I'm forgetting now what the strike was. I think it was next month. So I was planning on trying to gun for Clive Maughan's target price of 28, but when I looked up at the screen this afternoon, I was very busy, but I happened to look at the screen at 5:30, and when I saw it print 35.50, that was just too much for me, and I went ahead and took my profits. I may be getting back into the AGQ puts, but I've pretty much gotten out. So once I saw a move from 40.50 to 35.50, which is a full $5 move in silver, and I saw it print 10% down, that was it for me, especially with an option which has decay. So I've moved out of that. I managed to put on a number of shorts on the stock market this morning, which is not really a silver channel thing, but I did in the same account. I'm still short a number of some of the high flyer stocks. I'm short Baidu and the GMCR, the Green Mountain Coffee Roaster. So I'm still short some stocks, but I'm out of the AGQ position. Now I know a lot of people are disappointed at this move. This is actually a very exciting move because now, of course, it's time to buy physical silver. But before I get into that, I wanted to talk about the meaning of this move and the meaning, of course, all the moves. It's not just this move in silver. We had a tremendous move in a lot of the commodities. Oil had a big move. Of course, we have the very important move that we had in the Dow, and you can see that that's a very important technical move because we have the support that's built all the way from the March 2009 lows. And you can see it's a point that's been met a total of 3 times here, and it's a decisive break. And the break we're looking at here is actually down below this significant support line, although we did have a bounce. So if we get below this area in here, let's pull out a little bit farther to the 8-hour. If we get below this area here, we could be looking at a free fall. If we go back to the daily, you can see that back here in 2008, during the fall collapse of the economy, and that's what we're looking at here, an economic collapse. You can see that line is very similar to the point we're at right now. So, and once we crossed that line, it was a free fall. So, is that going to repeat? The thing that makes me think it probably will is if you can see this bearish MACD crossover on the downside here. So, it looks like the stocks are set for a drastic fall. Now, I wanted to pull up a gold stock overlay. Actually, we've got stocks here, so let's just overlay with gold, because if you remember back in 2008 there was a period where gold and the stock market, actually we want to do relative to, where gold and the stock market seemed to trade together and then they kind of separated from each other. So let's try that again because I don't have the right time selection. We'll do the Dow and we'll put it on weekly, and then we'll do a gold relative. And the reason I'm bringing this up is because I want to show you how initially gold fell with everything else with this story. Well, it's not going to let me do it, but you'll just have to take my word on it. Initially, gold fell with everything else, but then gold rallied, and it basically broke away from the crash that was happening in the markets. You can see it just on the gold chart here. It fell with everything else during this period, but then before we went into 2009, you remember the stocks rallied from March 2009, but gold actually started rallying and getting stronger in here. Now silver did a much more dramatic drop and had a very amazing low around 850 back in here. So that's the point we want to talk about here, is this silver industrial issue, why silver tends to drop more dramatically than gold during these recessionary or threatened recessionary periods. And that is the perception that is always haunting silver, is that if there's a downturn, that silver isn't going to do very well at all. So I wanted to counter that, and the first thing I wanted to start out with, I'm going to use 3 points to explain this. The first point is you need to understand that these are paper silver prices. This isn't the price of the physical. This isn't people liquidating physical silver. This isn't people digging up or opening safes and running down to the coin store and selling silver because the world is ending. These are paper traders who are taking profits or just liquidating positions. They might not have even been profitable positions. They're just simply liquidating positions because a cash crunch is occurring. So this asset is no different than any other asset, in that if investors have paper investments that they have money tied up in and they need to raise cash because things are plunging somewhere else, they're going to sell those assets. So that's the first reason why you shouldn't take a decline in the paper silver price as an indication that silver ultimately isn't going to rise, especially physical, because this, in my opinion, is a false signal. Now, of course, I saw it coming and tried to take advantage of it using some trading strategies with puts and the AGQ and things like that. That doesn't mean that I don't understand that this is not a real price move in silver as far as the physical is concerned. And that's, I wanted to move to the next point to counter that argument that silver is something that has to move down during downturns. And the first point I wanted to make is in regards to the mining of silver. Now, most of you know that primarily silver is mined as a byproduct. Now, this site that I'm taking you to here is the Kitco Metals historical charts. If you go over on the left here, and I'll go ahead and link this. If you go on the left here, you've got your industrial metals here, and if you use this historical chart section, it's very informative. One of the reasons why is because it not only has the price history, but it also has the warehouse inventory stocks. So we know that silver is primarily a byproduct of the mining of other metals, that being gold, copper, lead, and zinc. Those are the 4 primary metals that silver is a byproduct of. So we need to examine this to understand why silver won't necessarily respond the way people expect it to respond due to the byproduct factor. Now, if we look at these, let's look at copper first. So when we click on copper, what Kitco gives you is, you always want to scroll down to the bottom because it gives you your 5 years. So you can see the 5-year copper price is still pretty much at a high, but you can see we're falling here to 3.5, so that puts us right here in this range, fairly decent historical range. But if we go down to the copper stocks and look at those, you can see that the copper stocks are actually very, very high. Now, what does that tell you? It tells you that they have a lot of copper sitting in those warehouses. And if we go over to the lead stocks and lead price, you can see that lead is now falling. There's the 1 year. The 5 year shows that it's, the average price is around 1, but now lead is falling. We're at 96 cents. And look at our lead stocks. You can see our lead stocks are absolutely practical historical records. They're incredibly high, the stocks we have of lead. And if we look at the stocks of zinc you can see the 5-year is even more dramatic than any of the others. It's actually a tenfold move from the lows that we hit in the very beginning of the recession to where we are now. We have tenfold the amount of zinc in the warehouses, and the zinc price has been pretty stable here, but I would imagine if you look at the latest, we're falling. Here we are down to 88 cents. So 88 cents is right around in here. So what does this tell us? What this tells us is this. If silver is a byproduct of these other base metals, then if the warehouse stocks of these base metals are at historical highs and the price of the base metals are falling, there isn't going to be a big profit in mining these metals. And if they drastically reduce the mining of these metals because it's not profitable, then obviously the secondary knock-on effect of silver yield is going to be decreased. So here's an example of how the economy slowing down is actually going to cause less silver to be mined. And that's completely counterintuitive to what most people think. The next issue I want to address on this topic about silver falling in bad economic times is to counter the idea that these are bad economic times worldwide. And so I've chosen what are in my mind the three primary uses of silver as far as growth stories. There may be others. I'm not going on the exact facts. This is just a kind of common sense guess at things. The first thing that I pulled up is the cell phones, and we know that cell phones are growing. Here's the projection, the growth projection for smartphones. It's the same for cell phones and all phones. It's something that's growing at insane rates. We know there's roughly 2.5 billion people when you combine China with India and that area over there. So a tremendous market. You can see we've grown. The number was around 100 million in 2006, 150 2008. Now the first thing you want to note here is, remember the recession we had? Yeah, it's not on this chart. The growth just continued right through here, and here's the projections of growth. So there's your phones. So not impacted by recessions or even depressions. Next one I wanted to pull up is the growth in the solar market. Now this is a huge, remember that silver's primary and key important properties are conductivity and reflectivity. It is the #1 element of the periodic table in both conductivity and reflectivity. So it's a key component in electronics and solar. And you can see here's the growth projections for solar. This is 2008, and this is through these numbers through 2008. Then we get our projections after that, and you can see the 15,000 here that nearly doubled what happened the year before is just a tiny fraction of what they project by 2015. A 5-fold increase, and this is already a 5-fold increase from where it was. So it's ridiculous levels of growth, and of course this consumes silver. Now again, our 2008 recession, not here. Didn't happen as far as worldwide growth of solar. So let's look at my last one that I picked here, and that is worldwide growth of computers. And I picked an article here about the growth in Brazil. Brazil ranks, and this was published the 20th of August this year, Brazil ranks 3rd in world computer sales, and it gives some of the figures here of the growth, and it's just growing like crazy. So you can read these articles. Anyway, the point is this: the story that silver should go down in a economic pullback is just a story. That's all it is. It did not, the usage of silver did not decrease at all during this last recession. And as the market's projecting that we may be entering into the next recession, I don't project that silver usage and growth in all of its production items is going to decrease at all. So I think this is a big fake story. It has to do with liquidation of paper positions. It has to do with projection that silver demand will decrease, which it won't. And we can see from the byproduct of the base metals that if anything, if we really do slow down, then there'll be much less silver mined. It'll just make the problem worse. So silver is a complete exception to all of these rules, but of course it's going to, in the short term, behave that way. But ultimately it's going to do another one of these. You can see this move reacted ultimately to the printing of money. This move was QE2. So ultimately silver will move based upon the reemergence of it as a asset that protects one from inflation and the people rushing to it. And last of all, of course, I wanted to deal with the issue of rushing to it, because what do I want to do with my silver paper profits? Of course, is buy more physical silver. So it's time to cover that when the price is cheap, and I've gone through and looked for bargains today, and there's some interesting, I won't say bargains, but I don't really like the Cougar coin. I agree with some of the people who've commented. It's kind of ugly. Not to say that it won't be popular, not to say that it won't sell. Right now you can pick it up for 40 bucks. That's pretty good, but I don't particularly like the coin. I like the Grizzly a lot better, and you can pick up the Grizzly for 42 bucks. That's pretty good. That's a pretty good price for that coin. Let's see how many they have. And they've only got 139 of those left at APMEX. But I have to say by far that with the price the way it is, and with a drastic drop like that, if you're shopping and you want to get the best silver for your money, I'm going to have to go ahead and recommend the 90% silver bags in this case. And right now your 90% bag 1000 face is going for $26,247. So we'll do a quick dreaded calculation here, and we've got 26,247, and we divide that by the 715 ounces that's in one of those face bags, and it comes to $36.70. So you can get junk silver right now for $36.70, and that is an incredible buy. Will silver continue down? It may. I've covered my puts simply because the expiration date is so close by. I can't let an opportunity like that pass by. I may get back into puts on the AGQ. It depends on where the price bounces from here, or if we begin to make new lows, I may go out to a later date or a later price. We'll have to wait and see what happens with the price of silver and with the price of the stock market. But you need to keep your eyes on the deals for physical silver, because the name of the game, of course, still is going to be stacking as much physical as you can when the price is low. Ultimately, I'm projecting that we will, I think, bounce off this line, which is giving me a price projection of roughly, at current rates, we're going to touch down roughly to 33, maybe a little bit below 33, and then I expect the rocket ride up to 100 that I'm projecting for the end of the year or the beginning of next year, and we'll see if that happens, and we'll talk to you next time.